Welcome to Informed Investor. Over the past 5 days, Natco Pharma stock has crashed by 25% with the steepest decline today of 19%. What caused this massive sell-off? The sharp decline comes after Natco Pharma's disappointing third quarter of fiscal year 25 results. Let's decode this. Natco Pharma, incorporated in 1981, is an Indian multinational pharmaceutical company based out of Hyderabad. Natco Pharma is primarily focused on developing generic drugs, particularly targeting drugs that are in high demand and sold at high prices. The company leverages opportunities arising from patent expirations to introduce affordable generic versions of these drugs. Natco also utilizes the exclusivity period granted for certain generic launches, enabling it to capture a significant market share and generate substantial profits during this window. It has built a strong presence in over 50 countries. Its key markets include the United States, India, Canada, and Brazil, along with operations in countries like Indonesia, Thailand, Australia, Singapore, and China. But what really makes Natco Pharma stand out? Let's break it down into its core business segments. Export formulation is the biggest chunk of Natco's business, contributing 44% of revenues, and it's a high entry barrier segment. Why? Because Natco focuses on niche opportunities in the US, targeting Para 4 and first to file molecules. These are essentially generic versions of patented drugs, and if Natco is the first company to challenge the patent, they get a huge advantage in the market. It's a strategy that can be very lucrative but also requires a lot of legal and regulatory expertise. Natco has a presence in the Indian market through domestic formulations, generating 15%, primarily in the oncology with a portfolio of 48 products. Oncology drugs tend to have strong demand and high margins, making this an important growth driver. But Natco isn't stopping there. It's also expanding into diabetology, cardiology, and critical care. Given India's growing healthcare needs, these segments could become a bigger revenue contributor in the future. Then next comes Crop Health Sciences, which generates 2% of revenue. This is a relatively new business for Natco, but an interesting one. This is their newer business where they are making pesticides and other chemicals used in farming. They are expanding aggressively in this segment, trying to diversify beyond just pharmaceuticals. Next is API or active pharmaceutical business. APIs are key ingredients used in medicines, and Natco has a 10% revenue contribution from this segment. Lastly, a significant portion of Natco's revenue comes from non-operating sources, including licensing income, one-time payments, and other business activities. This can add volatility to earnings. For example, as of Q3 of fiscal year 25, it accounted for 29% to their revenues, but in fiscal year 24, it accounted for 4% of the revenues. So now what exactly went wrong with Natco Pharma? Why did the stock take such a massive hit? Let's break it down. Natco reported total revenue of 6,511 million for the third quarter of fiscal year 25, which is a sharp 18% decline year on year. But the real shocker is the quarter-on-quarter drop. In quarter 2 of fiscal year 25, revenue was 14,349 million, which means the company has seen a massive slowdown this quarter. Now let's talk about profitability. EBITDA margins has shrunk to 33%, down from 38.3% year on year and a whopping 60.5% in the previous quarter. That's a drastic decline. Net profit or profit after tax for the third quarter of fiscal year 25 stands at 1,324 million compared to 2,127 million in the third quarter of fiscal year 24. PAT margin also contracted to 20.3% from 26.7% year on year, which means the company's overall efficiency and profitability are taking a hit. Now, what's the main reason for the slump? The biggest culprit here is Natco's export formulations business. Now remember, this segment is Natco's biggest revenue contributor, making up 44% of total revenue in the third quarter. In FY24, it was even higher at 76%. So when export formulations nearly halved from 6,056 million in the third quarter of fiscal 24 to 2,858 million this quarter, it dragged the company's overall numbers down significantly. Meanwhile, domestic formulations saw only a slight drop from 994 million to 961 million, which means the real damage came from exports. Now, what is the road ahead for Natco Pharma? Natco Pharma has built its business on a strategic play in the US generics market, taking advantage of the Hatch-Waxman Act to challenge high-value drug patents. Its success hinges on the first mover advantage, where it files paragraph 4 certifications to be the first to launch a generic version of a patented drug. If successful, it gets a 180 days of exclusivity, allowing it to dominate the market before competitors arrive. This strategy has paid off massively with Revlimid, a blockbuster cancer drug that has been the primary growth driver for Natco over the past few years. The company's exclusive US launch of the generic version significantly boosted its revenue and profitability, making it one of Natco's most successful ventures. But here's the problem. Revlimid's exclusivity ends in January 2026. Once that happens, multiple generic players will enter the market, leading to a price war and sharp decline in revenues from this product. This is a well-known cycle in the pharmaceutical industry. Once exclusivity expires, margins erode quickly. That's why Natco's future depends on its next set of blockbuster drugs. The company has a pipeline. Natco is betting on a mix of high-value, complex generics, oncology drugs, and niche specialty products to sustain its momentum. But the big question is, can these drugs generate the same kind of revenue that Revlimid did? Because launching new drugs is never easy. Challenges include regulatory hurdles, legal battles, and competition from global pharma giants. Now, if you're an investor or tracking Natco Pharma, here are key points to consider. Revlimid accounts for a large portion of Natco's earnings today. Post the decline, revenues will decline unless the company successfully launches new blockbuster drugs. Investors should monitor upcoming drug launches and assess whether these products can offset Revlimid's revenue loss. Secondly, Natco has a robust drug pipeline, but the speed and success of approvals will determine future growth. Keep an eye on paragraph 4 filings and regulatory updates. These will signal how well the company is positioned for future market entries. The company is also betting big with semaglutide, of which there are two formulations, one which is already out in the public and the other one is still under litigation. Watch how this product grows. Now, with increasing competition in the generic Revlimid space, Natco's margins will shrink. Watch how the company manages these costs, invests in R&D, and diversifies its revenue streams. Lastly, Natco's strategy relies heavily on challenging patents. This can lead to costly lawsuits and delays. Investors should track ongoing legal cases and settlements, as they can impact both short-term earnings and long-term strategy. Now, to conclude, Natco Pharma has executed well in the past, but the company is now at a critical transition point. The post-Revlimid era will determine whether it can sustain its high growth and profitability or struggle with declining revenues. While the current financials remain strong, the real test is whether the next set of drugs can deliver similar success. Investors should closely track new approvals, legal battles, and global expansion plans to gauge Natco's long-term potential. Now, having said that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.